Hey everybody, and welcome to this week's Bear Facts Friday, August 21st. Thanks for joining us. As always, you got myself, Mark, and Lisa. I'm trying to filter out the news. Mark put it in perspective, and Lisa is going to answer the question of the week. So I just wanted to briefly mention the 2020 tax plan. I know that with it being the Democratic convention this week, a lot of people have been asking us questions about what it potentially means to them. And there's a pretty detailed proposal out there that I've read through and have a baseline knowledge of, that if anybody wants to call me and discuss in further detail about what it may mean to them specifically, how much their taxes may go up, may go down, or their heirs, or if there's any planning around that, feel free to reach out. It's a little too detailed to highlight in this week's Bear Facts Friday, but don't hesitate to reach out. The only things that I just touch on: potential change in the capital gains rate. If you do have more than $1 million of investment income, there's a potential change in that rate. And then also, for those investors in the highest income tax bracket, charitable deductions, you possibly might be limited to 28%, regardless, even if you're in the 37 or 39% bracket. Those are just a couple of things to highlight. There's a lot more detail. So anybody wants to, feel free to reach out to me. I'll be happy to talk through that with you. Mark?
All right, thanks, Kenny. And this week, I wanted to talk about stock splits because they've been in the news a little bit lately, getting questions around, well, not only what are they, but how could they impact me? And ultimately, what should I do as an investor if I own those certain stocks or are interested in owning certain stocks that may have a stock split coming? So essentially, what a stock split is just taking one share and dividing it up into multiple smaller shares. So in this case, we have highlighted on the screen what we would call a 2-for-1 stock split. So one share of $100 stock now becomes 2 shares that are each $50. And if you notice to the right of the bar, it doesn't change the total amount or value of the company at that particular time. They both still equal $100 total. There could be a 3-to-2 split. There could be a 4-to-1 split. It could be really any number. But what you need to know is that it doesn't change the revenue of the company, doesn't change the market capitalization of the company, or ultimately what that means is how valuable the company is in the marketplace. But if you're interested in knowing, well, should I buy something before or after the split? What you should know is that companies decide to do stock splits predominantly when the price of one share gets to be so high that they feel they might be alienating certain investors because you simply can't afford to buy those shares or enough of them. And so in this example, someone might be priced out of buying a $100 stock, but they might be able to buy a $50 stock. And if you're a believer in that company, and if you're wanting to invest in a company and hold it for the very long term because you're really a fan of it and believe in it, then buying either before or after the split can make sense, ultimately because you believe that regardless, the value of that stock is going to continue to rise as more investors are attracted to it by virtue of theoretically having better access to it. And I think this might help illustrate how the stock split works, is simply splitting along. If you start with one large tree trunk and you split it, the mass of it is still the same. It's now just a little bit more manageable to carry one piece or another. And you could split these 2 pieces into a total of 4 pieces, and so on and so forth. So that's the visual of the week, talking about stock splits.
Thank you, Mark. The question that I got this week that I thought might be worth repeating is, where do I find my account statements? The important thing to realize is when you first become a client of ours, we do link you into 2 platforms. The TD Ameritrade platform called advisorclient.com and the Bear Wealth platform, bearwealth.com. The data in all of your account activity is all housed in the TD Ameritrade account platform. But the data that you're going to find, or what the information you're going to find on that platform is strictly the data. You'll be able to find your monthly statements and also your annual tax forms. The reason that we transport all of that data into our platform is because it allows for actual more robust reporting so that you can see charts and graphs and other things that are much more easily interpreted. We don't house any of your documents, however, so if you're looking for your documents, you'll need to go back to the advisor client. There are 2 separate logins for these platforms with 2 separate passwords. If you have problems with bearwealth.com, I can reset that password in-house. If you're having difficulty with the advisor client, we need to do that through TD Ameritrade. Some of the other things that you might want to watch if you're on the TD Ameritrade platform is just check your email address, phone number, and mailing address, because sometimes we forget to go back and look at those. But if you're looking to monitor your accounts and kind of keep an eye on how they're performing and what your actually total household wealth picture is, the better place to do that is the bearwealth.com platform, because it's going to have much more information. In addition to your accounts, we also have all of our other company-wide reporting and some of these presentations and things like that on there. So if you have any questions, give us a call.
All right, thanks so much, Lisa. Well, y'all make it a great Friday and have a great and happy weekend, and we will see you next week.